Hello everyone, welcome back. So we will start our discussion for the day. We left on almost halfway, and I was discussing the board, this board member. So Helga is a successful academic career at the university. So this topic is related to corporate governance. So we have to study according to the rules of corporate governance. So the very important thing is that she was a dean of the university engineering faculty before she retired in 2017. And Helga sits on KCTP board as a non-executive director. So it looks a great value in terms of because she is connected with the university. So and this business model require collaboration with the university and the tech parks. Uh, but very important thing is, as we already discussed, that once they float the shares, so 80% was with the university. So she is actually representing 20% of the KCTP equity. So here, people might can criticize that she has a shareholding interest. So while she is into a non-executive director, because typically when think about non-executive directors, they are the expert of their field, which she qualifies, of course, but they are neutral. They are not a part of the shareholding, neither they are a paid workers. So this is a little bit point of worry in all the other directors. And you can see all these directors has their own expertise, which is really good. And if the scenario build up that they want to buy some other business, which is totally different nature, so this board will be irrelevant in that particular business. So I was thinking large, expecting some possible questions out of this. The most important is, of course, about the structuring. And as I told yesterday, that who will join which committee is very important. And when we study the bookish part, you will come to know that for audit committee, we need at least one financial expert, which should not be a shareholder or it should be independent, right? So this is really important. And for other committees, we don't have much strict criterias. And it's good they have a remuneration committee because if you remember this scandal in America, which is which was Enron scandal. So the main focus of that scandal was corporate governance. That directors were giving salaries to them whatever they want. So there was no remuneration committee that time. So that's really important that we should be clear about corporate governance, and we will be clear once we will go through the bookish part. So this is a combination. But being strategic leaders, we should know that when we see something and it alarms, so we have a capacity to research and come up that what is the best way of moving forward. Now, here we are entering into a very interesting discussion, which is called risk management, internal control, internal audit. And those who are internal auditor, this is a very, it's like a heaven for them because it's a huge area. Risk management has become really popular from last 15 years as there are a lot of crises are coming starting 2007. There's housing mortgage balloon blast in America, and and America is the main driver of the economy. If America goes slow, Europe, Far East, Middle East, everything goes slow. So we need to analyze that what are our potential risks so we can Um, we know that we cannot eliminate a risk. Risk cannot be finished. If we have a heart, the fear of heart attack is with us. We can take omega-3, you can exercise, you can do cardio um, more, but does not mean that it will finish the risk. No, risk cannot be finished. That's why he used a word here, mitigation. Mitigation is the word that is being used for it. So we need to assess, first of all, what is risk management. We have to identify the risk. We have to see that what risks are associated with my business. And it's very easy, like in a way, but it differed from business to business. For example, KCTP risk are different from a bank. Bank risk are different from FMCG, fast moving consumer goods companies, and the trading companies or manufacturing. So we need to apply the relevant risk on that. So what risk they identify for themselves: security, tenant turnout, health and safety, IT, and cyber security. These are the risks that they identify. So there might be a question to you that what other risk KCTP might have which is not being highlighted. So means that we need to keep all the risk in your mind. So just to recall as a risk, so if you deal with foreign currency, you have foreign exchange currency risk. If you have taken loan interest, so you have the interest rate fluctuation risk. Then you have translation risk. Then you have transaction risk. We have employee can steal things, employee risk. We have we have inherent risk, we have control risk, we have various type of risk. So maybe it's good to make a list of the risk and think about and whatever will be applied. And you can apply most common. So basic risk will be applied on every business, and there will be some specialized risk that we can apply on the particular entity. So let's start with security risk. Security, so it's the most important point in any place, whether it's a Disneyland, it's a theme park, it's a tech park, it's a media park. All these parks should be highly secured. That's why if you go to Florida, if you go to Paris, for example, Disneylands, you will see, and even Dubai is the best example, that high-end security. If you enter in Ferrari world, you will see that there are security monitoring. This is really, really important because there will be distorters, your competitors, and even law abiders and even terrorists as well that want to spoil the good work that your city or your people are doing. So that's why security is really important. And he says that theft and vandalism, technology park may be target for industrial espionage with tenants competitors wishing to know what products are being developed. So this is always like Toyota and Honda, they are competitors. So there is a war that what Toyota is thinking to bring next year. Honda is really interested, and there are people, even there are companies, although it's very unethical, but they fire some employees so their competitor can hire and bring. Then they bring their news of these competitors. There is a malpractice in the market as well. So um, so how they feel that these risks can be mitigated: 24 hours strong security. We can discuss theoretically like it should be monitored by CC cameras, recording a proper security room, proper security authorized people. Already we discussed that there should be a um, extra background check of the each. They should be competent. They should know. It should be in relation to a size of the park. The labor force should be accordingly. These are the loud thoughts that we can have. So KCTP vets all staff carefully to ensure they are not likely to pose security threats. As we know that if you have a traitor inside, that will be the most dangerous. So we need to vet. Vets means like we need to take an extra precautionary procedure to make sure things are aligned with the security risks. KCTP has comprehensive insurance cover for both injury and property damages. So this is a very, you can say, a global way that you put a compulsory insurance on staff of your tenants. You put compulsory insurance on the fire uh, hazards for the premises of the tenants, and then of course your own building should also be insured. And in Dubai, what we do is like we have civil defense authority. They come inspect, and give a license that you are well maintained. You have exits in case of fire. You have the alarms. You have extinguishers. Everything like you. I mean, sky is the limit in order to protect by using the latest alarm sensor in order to preserve yourself. Tenant turnovers. So he says many tenants are new companies. There is a risk that those companies will not survive. This is true actually. I myself saw that all these parks or cities that generally they are small because they are a bit of expensive as well. If you go outside in a non-park area, you will be a little bit in cheaper budget. But so new tenants who are new companies, they are always very volatile. If their business works, fine. If it doesn't work, they will leave you. And previously we discussed that they have an average that 2 years people generally leave. If not, then even some tenants are there for 10 years as well. So it's business to business. But what I can do, like if I am KCTP, I can introduce a tenant care department and advisor, like who can work around with a tenant. If a tenant is in loss, we can work out about some deferment of, because it's a real estate business at the end. So we can give them some good installment plan. We can work around their payment plans, installment plans, as I said. And I mean, I don't jump to that we can reduce their rents as well, but it depends on economic conditions. So if outside premises there are rents are decreasing, so we should also decrease the rent, because we will lose the tenants who will feel that we are overpriced. So KCTP aims to have a mixture of tenants to ensure the turnover of the tenant is manageable and cash flow is not affected too badly by these voids. So of course, tenant management is properly a good way to handle the turnover. Means the rate of leaving tenants are uh, is really important, because I feel that you are a successful real estate company if your tenants goes longer with you. You help around them to stay, so they feel more bounded. This is a very strategic approach, but of course, strategy has this issue that every person has its own strategy. So health and safety, as we discuss, is I mean, these are global pressures. HES, health, environment, and safety. So some of the processes and practices used by tenant may be hazards. So what it can do is, because it's research and development, electrical, electronics, ICT, biotechnology, these are the segments. So there might be some damages. So again, we need to make sure that the tenants and the KCTP itself has the defined procedures to manage the health, environment, and safety, the procedure, policies, even if there are equipments required for that, so they should place into all tenants must inform KCTP about their activity, that suitability safety procedure. So if you implement ISO is gonna take the procedures in the written down. So it will be an audit evidence that can help you to do a health audit or safety audit and environment audit as well. In terms of IT, because they are going to provide the data services, so operations are heavily dependent on the availability of its servers. So what we can do is we should have. Lastly, I explained you what is the hot site, which has technicians which have hardware, software, and full ability to restore if anything happened to servers. So we can say we need a proper IT room, specialized people, authorized policies, specialized equipment as servers, and they should be bought from authorized, genuine vendors, not like from XYZ, because that can bring a lot of problems to you. So we need to implement a information system security policy. In short, I can say, what does it mean? This is, of course, once we go through the bookish part, we can read more about it. Cyber security, cyber crime, cyber issues are increasing day by day. Even might you know that Facebook, LinkedIn, Twitter, Gmail, they have hacking attempts on hourly basis. Means there are hackers who are attacking, and sometimes they are really successful. I can share you one story with the high cybersecurity issue, which can go so dangerous without taking a name. So there was a hospital. It's the very best hospital, and so one day the staff came. They log in the system. Screen was blank. So the patient has appointments, and all the patient reports nowadays, electronic. No one carries a physical file, so everything is in the server. Now patients are there, doctor is there, but there's no record. Doctor don't remember personally that what is the issue with the patient. So then this hacker left a note. They generally call you to a Linux environment chatting box, which is non-trackable. So they chat, and then $2 million they agreed to give him to restore the servers. So this is, I'm just telling you, a hospital which is a good hospital, the best hospital in the country. But so this is one case. There are a ton of cases which are suffering from cyber, and some businesses, even banks, maybe every month you receive an email from the bank that don't respond to this SIM. Nowadays, this SIM fraud has come. So these are all cyber related issues. Tenants file confidential information concerning new products and services. So if you KCTP as a server and the clients are using hosting their services, so means all the precious data is there. So you need to be very, very, you need offline security, you need a backup plan, you need a business continuity plan, you need this business continuity plan is really important nowadays. I felt that a lot of companies have understood that in terms of IT, they need to work on business continuity. So ensure that its servers are secure. How we will ensure they are secure means, so there will be a policy that who can touch the server, where the server will be placed. It should be a locked room. No unauthorized person can go. So the person who can go should have logical authentication, physical authentication. Then once he opened the server should have layers. Uh, so shadows and then leading to backups. So it's really a very tough field now. It's a growing field, cyber security. But of course, for our examination purposes or being a finance professional, we need to memorize 6 and 7 points. That's really good for the cyber security. If we do that, which I told you about policies, hardware, softwares, then things will be better in our controls. Now we are moving towards the interesting part. Why I'm saying interesting? Because we are from finance, and financial guy, when they see the balance sheet, income statement, cash flows, and equity, they feel more comfortable. So it's an extract from KCTP financial statements. So it's a consolidated statement of profit and loss for the year ended 31st of uh, 2021, you can 20, you can say. So as per IFRS, you know that the financial statements should be in comparative. So 2 columns are mandatory for showing a financial statement. So that's the basic rule. And you can see the figures. Now we have revenue. So you can see that revenue is increasing. It was 449, it becomes 479. Then cost is also increasing, maybe inflationary fact or whatever. Marketing expense are also increasing. Then administration expense are increasing, but in a very slight range. Operating profit has increased over the year. So in terms of profitability, operating profit, we can see company is in a steady growth, and it's a stable look. And here what we can do is, here we need to apply our 360-degree analysis tool, which is very common, that you check the profitability ratios, you check the, so in profitability ratio, what we do is we take the GP sales ratio. Very important is nowadays the growing thing is common size financial statements. You might heard about that common size financial statement. What does it? How does it work? So we say sales is 100%, and everything will be as a percentage of sale. So for example, if I see these two figures, I still need to calculate few things to analyze where it stands. But if it is a common size financial statement, which is as a percentage of sale, so I can see marketing expenses, for example, are 2% of, say, I'm just assuming 2% of sales. Rent is 5% of sales. Say cost of goods sold is 30% of sales. So it makes a quick sense for us. We can see yes. And of course, this is very important that whenever we see the ratios, it should be in comparison with the industry ratios. So of course, he has to tell us the competitor ratios or industry ratios. Then I can, I can't compare my own self with myself and I will say, oh yes, my GP is very good. No, that is okay to some extent, but we have to compare with the best in class, which is benchmarking, and or industry, that how industry is. But it's very important that we compare apple with apple, mango with mango. Means KCTP can compare itself with a similar type of investment and a similar type of, like, even I cannot compare a small park with a bigger park, because bigger park has economies of scale, smaller park has diseconomies of scale, right? So there are typical ratios that we have a list out, we can discuss on. You can see that financial expenses are also increasing, and profit and tax is maybe progressive tax. It means if you have more sale, more profit, you have more tax into. Overall, you are in profit. This is consolidated. So one is profitability ratio. Then for financial position, we have say current assets versus current liability ratios, liquidity ratios. Then we have long-term ratios in terms of solvency ratios, right? Then we have book to equity ratio, means how our equity is doing. So these are some ratios that can help us to analyze. But because case is in front of us, we need to memorize the case. Then there will be a summary of important point of the case that is to be used in the exam for a quick reference. All these things. Now, this is a typical statement of changes in equity. This is very important for the shareholders, because shareholders owns the equity, and equity is giving them a satisfaction that it is growing, so they are happy their money is growing. So we can see that 5,000 millions is the starting share capital. They reevaluate, so we need to investigate that what was the revaluation, what was the event which causes revaluation, a bit of accounting, revaluation rules, that is it properly done, what are the circumstances we need to revalue the reserve, revaluation reserves, um, why to create this reserve. Retained earning, of course, is coming through the profit and loss accounts and your income. So opening was 241, this year added 146, and we can see that dividend is given also. So now here it involves dividend policy, that what was the dividend, understanding profits, was the profit good, what was the last year dividend, is the dividend is going constantly growing or it is stable, because this will keep shareholders motivated with them to keep investing in KCTP. So this is how, anyways, it looks really okay in terms of profit and in terms of changes in equity. Um, let's move forward.